Are you tired of these futures-only prop firms that set you up to fail? Most of them want you to just blow up quickly and pay again for an evaluation account. Today we're talking funded stock trading. That's right, stock trading with rules that actually protect you. Yeah, I said that, rules that protect you. I'm Eddie Z. I'm sitting down with Michael Katz, the CEO of Trade the Pool. This is funding for stock trading done differently. Make 6%, pass the evaluation, and you're trading real capital. There are no time limits, there is a forced daily pause that stops the bleeding, and they have consistency rules that forces you to learn discipline. And here's what makes it wild. They're building trader profiles from real data. Are you a scalper? Are you a short seller? Are you long bias breakout trader? They track it, they know it, and they size you up accordingly. We even get into the psychological rules that make you better. Rules that sound restrictive, but actually force you to trade like a pro. So if you've been burned by the futures-only prop firms, stick around because this one flips the prop trading game on its head. Here is my conversation with Michael Katz from Trade the Pool.
All right. So I'm here with Michael Katz. He is the CEO of Trade the Pool, which is a very interesting story. You know, I only recently learned about you guys. There's a lot of trader funding people out there, and I haven't found anyone else who does individual stocks. So I am really excited to have this conversation. But before we get into that, I really want to learn about you. I want to know about what your journey's been like. How did you get into trading?
Yeah, Eddie, a classic story about that. My ex-girlfriend at the time, when I was 24, something around those lines, 23, my ex-girlfriend bought me the Robert Kiyosaki book, The Rich Dad, Poor Dad. And because I came with a lot of background of gaming, I used to play tons of first-person shooter. It made sense to me once I understood the stock market. It made sense to me, just to continue the same flow, right? Keyboard, mouse key, screens, good and bad, just buyers and sellers. So
it was like it felt like a video game when you first started.
Till this day, to be honest. It's the same thing.
I guess that's an interesting analogy. I mean, it really kind of is a video game.
For sure. And you need to make decisions in real time and do all your analysis and make sure no one is stop hunting you or just waiting with another rifle in the corner. So a lot of those things, yeah.
Right. So what were like the first markets you were trading? You were trading stocks right out of the gate?
Yeah, for sure. The stock market is the first thing I knew, so it made sense to me to continue doing that. Later on in the game, I did a little bit of Forex, very small amount of period, and then short amount of period, and then moved to futures, and together mix it with stocks, yeah.
Okay. So my understanding, and correct me if I'm wrong, is that you're not living in the United States?
No, I had my time there, but currently not.
Okay, so when you first learned trading, were you here in the U.S.?
Yeah, so when I started to learn, I was here, local, but in 2008, I was during the subprime. I was actually in New York. So yeah, I saw the news, I listened to the news, saw the market's reaction. That was my first big event in the market. It was shocking.
Oh, for sure. I mean, watching Lehman Brothers collapse, just watching, the Dow dropped so fast, it looked like the end of the world was near. It was quite a frightening time. I have lived through the crash in 2001, which also was a big crash, but it happened over a little bit longer period of time, whereas the one in 08 just happened so quickly. It really looked like, it really gave you that doomsday vibe to it, just from my own experience, having been around since the late 80s trading. But so was trading a full-time occupation for you then? Or when did it become something you did every single day?
Yeah, so it took me a while to get there, 2 or 3 years to just to get the hang of it. I opened an account with $10,000 at first, just play with it as much as possible, and just burned my eyes in front of the screens because I knew that I need this time in front of the screens, just to see the market reactions, how stocks moves up and down, the price action, basically, as we call it today, right? The market structure and all. I learned a lot from videos and from articles, anything that I could grab my hands on. And when I opened the account with the $10,000 at first, I knew that I will probably going to lose, right? Because that's in most cases, unless you have like a beginner's luck. And I did that, but I started small. It took me roughly 6 months to lose 20% of the account. 20 or 30% of the account, which is decent for a beginning. And then, as you continue to craft your strategies, understand more about risk management, and just give yourself enough time to see the candle reacts in real time, then you just become better at your game. Of course, through a lot of Excel sheets. Back then we didn't have trading journals like TraderSync and TraderView and all. So we had tons of Excel sheets. You used to write you probably, that better than me. Just writing everything down, the analysis.
Journaling your trades, what you did right, what you did wrong. How do you stay focused on your rules? And so let's talk about rules for a second. Did you have any mentor? Was there some person or was there some specific system that you were extremely drawn to?
Yeah, so I did have it for 6 lessons, like a one-on-one. I took one of the biggest mentor here. He passed away a few years ago, but he was incredible trader and also as a human being. And I did 6 lessons, like one-on-one lessons together with him. He guided me through what I already knew and basically gave me the nuances and the professional way to look at it. And besides that, I didn't have anyone else. It's just super hard work.
Were there any books that? Books
for
that
sure.
you liked? Go ahead.
I read, of course, Reminiscence of a Stock Operator.
That's a classic book. It's probably it's in my top 3, that particular book.
For sure.
I'm surprised it hasn't been made into a movie yet.
That's interesting. Yeah.
We can talk about that. Maybe we need to produce a movie.
Exactly. So if anyone listening right now,
Leonardo DiCaprio.
Leonardo,
he can star in it.
That's interesting. The funny thing is that when I read it for the first time, probably after 2 years in the game, I didn't really understand it. I read it, I went through it, but didn't really understand the depth of it. Only when I read it, probably 5 years after, it made much more sense to me, because it's not talking about, the technical, but it's actually talking about the idea, the narrative, right, behind it. And it was amazing to read it for the second time. One book that I used a lot at the beginning was John Murphy, Technical Analysis. That was, it's the Bible of technical analysis, at least for me. So that truly helped me to understand, patterns and market structure.
Awesome. Great books. Yeah. So you're trading stocks these days. And so how did you get onto the idea of this proprietary trading, or what we now lovingly call trader funding, has become a big term these days? And it seems like these firms are popping up like mushrooms. They're almost all futures. So tell me how you kind of got on that idea and to develop where you are now.
Yeah, so we call it limited risk trading. There are many, as you said, funding programs and such, but
you've coined your own term for it, limited risk trading. I like that.
we sat down and talked about the statement, what we are really bringing. And it's not just the funding, it's the fact that we are limiting your risk. Instead of spending your own cash that you worked on, just go with the small, it's a valuation phase. You pay like $47 on, it depends on the size that you want to trade with. And that's it. From there, you're done. There is no risk. You got to have a skin in the game, of course. But besides that $4,700, that's it. Not risking your own capital. That's definitely the next generation or the evolution in the stock market, basically. So
I think that's an interesting point, because you want to have some skin in the game, because at least from my experience, you see people paper trade, so like you can open a Thinkorswim account and you could essentially do what they call paper trading, which is you're trading, but it's not real money. There's no evaluation. You're just using it to kind of practice trade. Yeah. And unless you have real money in the game, you don't develop those emotional juices, the anger, the fear, the excitement, that fight or flight response that kicks in when you trade. And so that's why I find this limited risk concept, I love the way you coined that. It's so interesting.
Yeah, thanks. So, just to go back to the beginning of Trade Pool, before doing Trade Pool, I was the head of the traders in a local shop here. So I already knew about prop trading. I had about 70 traders traded with me every day.
That's a big group.
Yeah, in the office, it was incredible time.
You were running the shop, or
just
you
the
were
head
just a
of
trader? Okay.
I was the head of those traders. Of course, there was a CEO and the owner, but I was the head of the traders. And it was incredible. I learned a lot about my trading. I became much better than what I was before that. So when a few years later, when Gil, the founder of Trade Pool, he called me and told me about the opportunity, I said, that's an easy peasy decision for me, no brainer. I took it by the hands and we ran with it. Yeah.
Who's Gil? Tell us about Gil.
Yeah, Gil is an incredible person. Was a forex trader for roughly 20 years. Around 2016, he launched the Fivers, the 5% basically, which is probably the second largest right now prop firm for forex traders. Huge reputation, and they did an amazing job, still do. And so when Gil found the opportunity, after he did it for a while, found the opportunity to do it also for stock traders, and we hooked up pretty nicely and fast. From there, we just started to run and build it from the ground up.
Awesome. So how would you give us an introduction to Trade the Pool? What is Trade the Pool? And then maybe you could describe for people who've maybe never heard of it before, like a quick introduction on how it works. That would be great.
Nice. So our idea, like I said before, is to limit the risk of the traders. And we really see it as the next evolution in the timeline of financial markets traders, right? You had, back in the days, you had the pit, and then brokers came in and the commission-free trading around a little bit before the COVID. And we really see that, the accessibility of the market shift and change, right? Anyone can do trading right now. And we decided to go with that and really deliver just a super simple way to get your feet wet in the market and actually at the end of the day, become a funded trader. So we give you the capital to trade with and we split the profit without you risking anything on your own besides the evaluation phase. So once you join Trade Pool, you go through evaluation or a test, a challenge, and you pay for it, of course, like I said, in order to have a skin in the game. If you go through the challenge and pass it, you need to reach 6%, and you don't have any time limit. So
6%, you need to make 6% on the money.
Right.
to pass the evaluation, and there's no limit in terms of how much time you have.
Exactly. So when we launched Trader Pool, we actually had 30 days limit. So you needed to pass the evaluation within 30 days. It was a tough challenge. And still, a lot of the guys made the final and passed the evaluation. But once we saw that the data is supporting this, we understood that we can give more flexibility. Because when it comes to prop trading, you need to manage not just one trader risk, but the entire company risk, right? So the entire book, and you have great traders, and you have terrible traders, and you have one lucky trade traders, and we need to understand all of that. So we basically build profiles, and each trader goes to that category of profile. And after a while, when we gather more data, we understand what we need to do with him, right? To take him to the market, to go more than that. He's buying 100 shares, we're buying 500 shares. He's buying 100 shares, we're buying 20 shares. We need to understand completely how to handle the full book, which is an incredible tough job to do, but very rewarding.
So tell me if I'm wrong. I don't know why I'm thinking this, but how many different profiles are there? So I imagine you must, I'm guessing, and if I'm just totally off, just let me know.
Yeah,
I would imagine you have like a number of different trader types or trader personalities.
Yes.
Which helps you group everybody into different, like maybe risk categories.
Mm-hmm. Exactly. So we currently have 4 of those. And from that 4, we can understand, for example, we have a lot of guys that trade in small caps, right? Young guys, they love to trade penny stocks, small caps, shorting them, anything. And so we put them on one category, but there is a subcategory for that, or one profile and a sub profile for that, which is, okay, this guy is trading small caps, but he preferred to short them, right? And not to go long. And he's also using a lot of his buying power. He got 100K to trade with, and he's going all in 50,000 shares, 80,000 shares and such. On the other end, you got another small cap trader that prefer to go long, but he's very solid on this and very consistent. So he's taking 500 shares a trade and he's scaling into the position instead of going all in. So we're always on the data, just analyzing it and trying to figure out the best possible way to edge and basically.
Are there just sticking in that the small cap guy? You got the long guy, you got the short guy.
Yeah.
In the small cap world, are you seeing more of these maybe because of meme stocks, or there's a fellow online, he's been around forever, Timothy Sykes, who does a lot of the small cap stuff. Maybe his audience is so big they're coming to you. Why do you think that's a big category?
Yeah, so I guess there are two ways to look at it. One is the fact that, like you said, the memes, right? You have companies that will go open, for example, OP, and went from, I don't know, like $1 to $5 or $6.
Yeah,
just
open door.
Just in a matter, exactly. Just in a matter of a day and a half, right? So there are tons of those small caps that just explode into the upside.
Yeah,
and
what
all
was
of a
that?
sudden,
Ethereum one, BMNR, just a couple weeks ago. That was probably the most remarkable move I think I've ever seen. That was quite a short squeeze or something.
And there is always the pump, but there is always the dump. And for some reason, traders and myself included, it's much easier for me at least to see the short side comparing to the long side. You see the exhaustion, you see the capitulation, that the price is just getting rejected from a major resistance. And it makes sense that we will see another drop. So I guess the first thing is definitely the memes. And the second thing, a lot of the young guys, they don't have the capital to trade, right? So if I got only $3,000 to trade with, it's much easier for me to go to $1 stock than going to buy Tesla and Apple. And in most cases, when I'm talking to our traders, I would say, okay, now you have enough capital. You have 100K, you have $200,000 to trade with. Go to the large cap, and some of them will listen, some of them will not.
Yeah.
That's fine.
Yeah. They miss the excitement, or that's what they learned on, or that's. I'm curious if you don't mind sharing what the other three personalities are.
Yeah. So first of all, the main category is just by cap. So small cap, mid cap, large cap,
Okay.
etc.
And then long, short in each.
Exactly. So within each profile, we have short, long, the number of shares, we call it aggressive, right? How aggressive is a trader? Does it take a lot of shares? Does he scale into the position or going all in? The consistency, the behavior, we're checking a lot of those elements as well. So how many trades does it take every day? Does it trade every day? We have guys that the average time of the position, does he in and out, like just
a lot of variables. It's not just 4 personalities. It's a grid.
We currently at around 120 categories or parameters. Yeah.
Interesting. That's so interesting. I find the psychology of trading very interesting. So just the fact that you guys break it out, long, short, the type of market cap people like to trade, then their level of aggressiveness or conservativeness.
Mm-hmm.
Is there any others in there? Big factors?
Yeah, the duration of the trade. Yeah, exactly. And also, at least this is one of my favorite, because I like to scale into the position, because it shows me just an understanding of what type of trader is it. If you look for a more higher success rate, or you're looking for more risk reward ratio, right? Mm-hmm. Playing with those elements as well.
So now you have an unlimited amount of time to make the 6%, but as all limited risk trading firms have, if you have a drawdown, you're out. So how does that work?
Okay, that's a great point, because a lot of the times when traders are just getting into that or reading the rules on the website, terms and conditions and such, in most cases they won't connect to it at first, because let's face it, if you trade in your own capital with TD Ameritrade, you can do whatever you want, right?
Right.
You don't have any rules, any restrictions. But at the end of the day, and this is 100% incredible data, the more barriers, so-called, the more rules you have as a trader, the better results you will see. It's insane. That fact is insane. We see that if you have a daily pause, you become better because you're not blowing your account. And we do have a daily pause that just stop you for that day, and you can come back the next.
It's actually built into the software.
In the system. Yeah.
Wow.
Sure.
How does that work? Just like there's like a period, like an hour, or is there you have to wait till trading, like when the regular market opens? How does that work?
Exactly. So let's say you traded, you have $500 to risk per day. You reach that mark, the PNL, floating or unrealized is 500 minus. Then you're out for the day. We stop you. You cannot continue to trade till the next day when the market opens. So that's one rule that saves a lot of the traders and just give them the next day opportunity, which on your capital,
without blowing up the whole thing.
Exactly. And in most cases, like I said, on your capital, if you're trading with a broker, no one will stop you. They don't really care about that.
They don't care.
Money, right?
They don't care.
We have consistency rule, which is incredible rule when your best trade cannot be responsible for more than 50% of your total profit, right? So let's say you made $1,000, your best trade cannot be more than $500. That alone just help you to become better of not looking to swing for the fences, but actually doing it consistently. And again, it's just an incredible.
These are more
way to-
psychological rules,
Yeah,
which is very interesting. It's because those rules, if you will teach you really good skills. And I got to imagine a lot of folks, number one, want to swing for the fences. And number two, I'm sure you see that one position winds up being many, many times the reason, like one trade really is what blows people's accounts up. I bet you that happens more on the winning side more often than you would think, just because of like the power rule of the 80-20 law. So that I think that it would probably happen a lot on the upside.
Yeah, for sure. And once they understand that, okay, I'm not swinging for the fences, I need to be more responsible of each individual trade and actually show consistency. So staying within parameters, then once they understand that, then they become much better. They build, our greatest traders, they will build a cushion, like a buffer they can trade on. And whenever, let's say, you made $20,000 on the funded account, and now he has all the $20,000 as a buffer, as a cushion. So now we
Other firms don't do that. In futures, I know firms that it's just a drawdown from the high level, and then once you come down, they take you out, and you got to pay for a new account again.
Yep. I took a lot of the things that I had here in the local shop when I traded with them. So it just the understanding on how to make a better trader, right? How to improve a trader, how to make him better.
So what you're not teaching strategy, you're teaching risk management.
Yeah.
And in your mind, that's a very different approach, I think, than I see from other firms. Do you have recommended strategies on your end?
Right. So we do have a lot of. I'll go back a little bit. As a trader, as I said before, because I didn't have anyone to guide me on any level in like 99% of the time, except from the guy that I told you about. I knew that once we open trade a pool, we got to deliver tons of value to the traders. I don't care what it costs. We want to have communities. We want to have lessons, webinars, live events. Every quarter, we're doing live events, 6 hours, packed with information, packed with educational content.
Awesome.
We have VOD with more than 100 videos. 100 videos. Again, strategy, risk management, psychology, algo trading, literally you name it. And we're working day in and day out to make it happen. And even when we first started Trade a Pool, I reached out to Trade Ideas, Bookmap, all the big guys, and just told them, you know what, I will pay for a subscription for our traders. Any new trader that comes to Trade a Pool, he will get 45 days for free. That we as Trade a Pool, we pay for that, just so the guys will have enough tools to work with. So
45 days of what?
Of Trade Ideas, for example. So a scanning
Trade Ideas, the scanning website.
Exactly, or the Trader Sync, which is the trading journal.
Wow, great
We have
tools.
Bookmap, Market Depth. We have a Signal Stack for algo trading, Trend Spider for analysis, backtesting. So we just took everything that we can and still do, just to give the traders more in order to become better at the end of the day. So we're doing our part and also bringing more guys with us to it.
So if somebody signs up for an evaluation, but they don't even have a trading platform, what do you provide? A trading platform, or they need to have some platform like a trading view or something like that?
So currently everyone is trading on our own platform, which is called Trader Evolution. And so there we have all the rules, of course, all the data, level 1, level 2, the indicators, and we continue to improve that as well, adding more features to it. And these days, like literally 2 weeks ago, we launched another partnership with Transpider Signal Stack for the guys that want to create a bot, like an algo trading. So
Right.
they can connect Transpider, which is a trading platform, a trading platform or charting platform. They can connect it to Trader Pool and actually build or activate their own bots on that. So they don't need to use our system.
Wow. That
Yeah.
sounds amazing. So if somebody buys an evaluation account, you said like $100 gets you how much of a size of an evaluation account?
$100, it's 25K.
Okay. So then you're trading with 25K, or are you trading with day trading margin power of 25K? Like, is it 100K?
It's actually a $25,000 buying power.
Okay. Buying power. Okay.
But because we are a pool, it means that everyone is taking a chunk of our buying power. So, for example, if you're talking about the live markets, because the evaluation is on a simulator account, right?
Right.
So on the funded account, if we take the trader to the market, then we have an account, for example, with Interactive Brokers as an hedge fund, and then anyone that trade that account actually taking some chunk of buying power from our big pool.
Right. Right. So tell me, okay, let's go backwards a little. Okay. I purchased the evaluation account. I'm going to get access to all the market data, and it's simulated, like you said.
Yep.
I'm going to get all the tools that you just mentioned. And so let's say I've taken a valuation account, maybe a couple of valuation accounts, and now I've made my 6%. Now what happens?
You go to the funded phase, basically. Obviously, our risk department will go through the account and your trades, see that everything is okay. We gather the data, put it on to the guys of the data analysts, so they can start tracking you and understand even better what to do with you on the funded account. Like I said, the profiles and everything around that. And then you start trading our capital. Anything that you will make, we will split in this case, 70-30 to your favor, to the trader's favor. And every 14 days, he can ask to withdraw his funds.
So that once they pass the evaluation account, they're actually trading with real money. There's no in-between phase.
So there is no in-between, but there is a mix. So as I said before, on the, just controlling the full risk of the company,
right?
We have traders that we will take them straight to the market. We saw on the evaluation, and maybe you have
enough info on
exactly
what kind of trader they're going to be and how they manage their risk.
Yeah, so we take him straight to the market. Some guys we will take partial to the market, so it will stay a little bit on the simulator, a little bit in the market. It will be every single day. So we will have, for example, you will take Apple, you will buy 100 shares of Apple, we will take it to the market. But if you'll buy 100 shares of Tesla, we will keep it in-house on a so-called simulator, right? It depends on the risk side and again, managing the entire book. And those guys that, at least at the beginning, even if they pass the funded, we will keep them in-house. So we won't take him to the market unless we will have enough data that will tell us, okay, this guy is good. You have enough data to understand that he needs to be in the market. So it's
what potentially is the most amount of money somebody could, if they're like just an outstanding trader, they've been with you for an extended period of time, do you gradually give them more and more buying power?
Yes. So we do have a scaling plan, as we call it. And every time on your funded account, every time you reach a 10% target, we move you up the ladder. We give you more buying power. We give you more daily pause as well, allowance. So every time you reach 10%, you go to the next level. Right now, the limit is almost $500,000.
Wow.
But eventually, we will increase that as well.
Wow. Okay, let's say I open an account and I just it starts going down. Like I'm not figuring it out right out of the gate. Tell me how that works
On the evaluation or funded?
on the evaluation. On the evaluation.
Right. So first of all, you have 14 days free of charge, no credit card, nothing like that. Just download the demo for 14 days and play with the system, play with the platform, try it out.
That doesn't count at all towards 14 days. It's like a free look, figure it out, play with touch all the controls, play with the dials, see how everything works. That's great.
Exactly. You get $1 million of buying power, so you can really test it out and understand if you like it. If not, of course, within certain rules, so you will feel a little bit more connected to the evaluation, but it's totally free. And again, no credit card or anything like that.
Wow.
Once you're, because it's important because, two things. One, the platform is new. So if you're trading with TD Ameritrade your entire life or even for a year, you want to test out another platform. So you want to play with it, so not make any mistakes. And also just learn about the rules and the way it behaves. You do get a dashboard. I can share it if you like. It's like a full dashboard that you can see your progress bar. You can see your stats. Of course, all the orders and all the positions.
Can you share the dashboard?
For sure.
There should be a button there for you to share your screen.
Right. So this is basically it. Obviously, at the beginning, because you don't have any accounts, so it's going to be blank with some text. You will go to new order and you will start purchasing it first. This is mine, and I did everything. So there is no boxes here, but basically a new guy will see the account sizes, including the demo, and you would be able to choose one of the accounts. Let's take this one. This is a competition account. Every now and then we run in a trading competition. So you see your profit target, max loss, daily pause, stats on the account, the chart, best stock, best day, risk reward, success rate, and of course all the closed trades and open trades if I had any during that time. And we do have a lot of features here. I didn't do anything on the achievements yet, on the funded so-called, right? Because it's just a test environment for me. But you will have a certificate here that you can track it or share it with your friends that you became funded. This is also, just a verification for you as a trader to share with the world. And of course, you can become an affiliate. You see all the orders and everything. And if you don't like dark mode,
can you show me the platform where you're showing stock quotes and charts? Just curious to see what that looks like. Is it in a browser or is it an app? Looks like you're in a browser.
So we have a desktop and we have a web as well, a web version.
Which do you find works better?
A desktop technically, it's going
to have more resources.
Yeah, and also and we do have an app as well on the iOS and Android.
Okay.
So this is basically the platform. Looking
looks
at
a lot like TradingView. A lot of the platforms look very similar these days.
Yeah, that's for sure. You got the market depth here. We got tons of other windows.
And all of that real-time data and level 2 is provided for all in the evaluation account. You're getting all of that included.
Yep. You can see some of the videos, funded traders. I'm doing a lot of the interviews with our funded traders. So the guys that pass in the evaluation, I go in and roughly 10, 15 minutes talk to them and we record it and share it on our YouTube channel. So you can learn tons about trading and about evaluation and passing it and how to stick to your guns and get to that payout and actually increasing that over time. You can reach the dashboard that I just showed you, the FAQs and everything basically that you need. There are many extra windows here that I just didn't share it, but a watch list, other charts, Super DOM, all of those are available.
you can trade right on the dome? Can you put like stop
Mhm.
losses in?
Yeah.
You can put targets and stops. You can just like drag them.
Yep, exactly.
I'm
This
very
is
impressed. This is a very impressive product. I
Yes.
have to say.
for sure.
And okay, so I'm gonna get this question from my own group, and that is, can folks in the U.S. trade this?
For sure. 95% of our traders are based in the US.
That's
So
remarkable. That's
this is
remarkable. Because I
definitely
ask all these
yes.
funding guys, what do you do stocks? And they say, oh yeah, S&P or NASDAQ 100. And I'm like, no, those are futures. Can you trade
Correct.
individual stocks? So that's really quite a really cool niche that you've developed. I'm very, very impressed. Tell me, when you see new traders sign up, and from your own experience, because clearly you've worked with, I guess now be thousands and thousands of traders, but even like, what are the biggest mistakes that you see new traders make, and even veteran traders make?
Yeah. So I guess the first one for new traders, especially, is just going all in, just risking too much, putting too much size on their trade. As we said, swing for the fences. I mean, everyone is here to make money, right? And at the end of the day, if you get an opportunity, especially when it's not your own capital that you're risking, a lot of the guys will just put the money in and just hope for the best, right?
Yeah, moral hazard, as it's known as.
Yeah. And this is a huge mistake because you want to build that buffer, as I said. You want to create consistency. And even if you would be lucky and you would make 20,000, 50,000, I had a guy just the other day made $80,000 on one stock. That's fine. That's okay. You will get your payout and all, but this is not really trading. If you want to keep it for the long run, if you want to do that for a full year, for 2 years, 5 years, 10 years, you got to think differently. You got to think as a business, right?
I would imagine, though, that there are folks who only want to trade one or two stocks. So is it on one position or one trade that you're talking about where it's a problem, or you toast in one stock?
No, it's basically one position. I mean,
One position, okay.
The same ticker, it's fine. I've been trading Tesla in the Qs for the last 3-4 years.
Right.
90% of the time.
Plenty of action between those two.
Exactly. So
that's one big mistake, is that swinging for the fences and then winding up like, I don't know if you know baseball, but when I was growing up, there was a baseball player named Dave Kingman. He was a fabulous home run hitter. I think he led the league at least once in home runs, but he could not hit more than like 205 because he struck out so much. He struck out all the time. So you want to be more consistent, more like someone who hits 350, 400 than just swinging for the fences. That's what I hear. What's the next big mistake you see people make?
Yeah, another one that a bit related to that is not scaling in, because when you think of it, it doesn't make sense to try to time the market, right? If you think that you can time the market every single time, it probably won't work. Well, what you say to yourself is, okay, from here, the market should automatically move to my favorite, or a little bit play with it and then move to my favorite. And in most cases, if you track your stats, you will see that you will enter a position, it will go down a little bit up, play with you, take stop losses out, whatever it is, and then maybe work for you. So when you scaling in, you build in a position and not putting everything on the line at first, then it will automatically increase your chances on that particular position. So this is something that I encourage a lot of our traders to do. And once those that listen, in most cases, see a dramatic increase, especially on the success, the success percentage.
Any other mistakes that you think are people should be aware of ahead?
Plenty.
I know. One that I've been trading since the late 80s, became a stockbroker in the early 90s. So that, trading stocks is all I know, other than computers for traders. So, but the mistakes that I've seen the most, I have a school where I teach people how to trade. It's called Easy Breakouts.
Nice.
We trade breakout stocks. It's all day trading or swing trading, like very short-term trading. Trading the news seems to be a big draw. People think they know what's going to happen based on the news, or even better, earnings. And the earnings one's a big one, because what you think is going to happen is almost always wrong. When, the company beats earnings, stock drops 12%.
For sure.
The company misses earnings, but now announces a reorganization and a buyback, and then the stock moves up 15%. Like, earnings, trading earnings to me is gambling, as is the news. Do you see a lot of that?
Of course, they are looking for to trade the news, but because we do have the daily pause element in, then even if they're wrong by a bunch and not blowing the account.
Right,
So,
right.
But we do see a lot of activity around the news. At the end of the day, we are looking for, as you said, the breakout. So we are looking for that big moves, right?
So interesting. And I can't say enough that it sounds like your rules are psychological rules. And that's, I mean, the technical stuff is there, but human beings aren't robots. We're emotional beings.
Yeah.
And being able to strip a lot of the emotion, or learn, actually better is to learn to wrap your mind in your behaviors and just see the emotions for what they are, but make the appropriate corrections. That's when you really learn how to trade. So I think those are elements I really haven't heard a lot of other folks talking about when it comes to trading. So where can people find Trade the Pool?
Yeah, so we're trying to be everywhere, right? But we're online on all the social media, Instagram, Facebook, Twitter, of course, and I believe TikTok as well, but this is not my part.
Yeah, it's a full-time
YouTube,
job, the social media stuff.
For sure. YouTube, we actually stream live every single day. We have our guys that based in the US, Mitch, Michael, Steve, Joe, Josh, and Kevin. They are all streaming live. They're trading together, doing great job.
Is that free to the public, or you need to have an
on
evaluation
YouTube
account?
Just
Okay.
No, free on YouTube for everyone.
Okay.
In one. And of course, at tradeapool.com, we have our website. Go through it, read it, watch some videos just to get the hang of it. And of course, as I said, you got 14 days for free.
That's a gift. That's a gift. I mean, you get to touch it, play with it, figure it out even before you start your evaluation. I have one last question for you. Tell me one of your favorite client stories.
Okay, so that probably will be Arbnor. Arbnor is a guy in Austin, Texas. He lives in Austin, and the fact that a young guy is probably right now 25-ish. So he started with us, not a whole lot of ideas of what he's doing. He continued to craft his trading by using us, like literally using us for his jump, right? Because when you're trading not on your capital and with enough capital, you're not wasting time on trading small amount of shares, and your learning curve become much shorter to reach that goal. So he started and used our platform, did a few evaluations, didn't pass on the first one, then passed the evaluation, became funded, took some profits home, and then when he actually blew the account after that, he learned what he needs to do over again. So he passed the evaluation much more quicker the second time. When he reached the funded account, he created that buffer, as we call it, or that cushion, and actually continued to build it in order not to reach that termination ever again. And he's been doing it for a really amazing job. I did 2 interviews with him just a couple of months ago. It's online, of course, on YouTube, and it really touches all the right points.
So if you build a big cushion, you build this big cushion, you can just keep trading, and if you don't take it out at all in terms of a payout, you can just keep building it.
For sure. Yeah.
Wow. So in theory, if when you first get started, it kind of makes sense. Build yourself a nice cushion before you start taking the money out. This way you give yourself room to not get shut down.
Yeah, and you know, pay yourself a little bit. Let's say you made $10,000. Take 5 home. Take maybe 3K home, just for the feeling that you did good and you got some money in your pocket. But continue to build that. So the next time, the next month, the next 2 months, you will have more buffer to work with, meaning risking more, adding more risk to your position and make more money.
What questions have I not asked that I should be asking? I feel like I'm missing something.
That's a good question. That's a good one. Maybe I'll take a moment here. I don't know about the question, but I do want to share that we're coming to the States in mid-October.
October 2025.
Yeah, and we're doing a huge tour. It will start actually in Canada, in Toronto. We will fly then to Orlando. We're going to do a meetup with our traders, and then go to
do you know the date in Orlando? Because I'm in Florida myself, so maybe I come have a beer with you, my friend.
For sure. That will be incredible. We're going to be from the 15th of October all the way to the 19th or the 18th at the evening. Yeah.
Well, Michael, I really, really appreciate having this conversation with you. I'm really excited. I'm going to check this out for sure. I mean, as a stock guy, this really makes me excited. I have people who I'm teaching how to trade. I look forward to meeting you here soon.
We love that. Thanks so much.
Thanks again.